All right, good morning, everybody. Uh-oh, not me. I did something bad. I did not check my mic. Everybody, if you're in here right now, if you can type 1, let me know if you can hear me. I want to make sure I didn't check my mic before we started this thing. Hoping and praying that we don't have any technical... Okay, good stuff. Heck yeah. Well, good morning, everybody. Hope you're having a good trading week. It's Fun Friday. We're going to have some fun. It's going to be a good stream. A little quiet? Uh-oh. You might have to turn the... I've got it turned all the way up, so... is it a little quiet for everybody else, or can you hear me okay? Or is the music too loud so you can't hear me talking? Don't lie, Shaky. You turn your volume up so you can hear this music, right? You turned it up so you could hear this this banjo and the fiddle. All right, good morning. Good afternoon, good evening, ladies and gentlemen, wherever you are in the world. We're about to get started. I hope you're doing well. Hope you're having a good week. I certainly have been. Lots of good things coming along, and life is moving at a fast pace right now, which is good. Keeps things going. Let's get going. Let's get started. We got a lot of things to discuss today, and I want to, as always, bring some kind of value. So as we're going through this, I want to make sure that before we start getting into any sort of analysis, which this is the purpose of this entire stream, developing a thesis, building a thesis, being capable of building a thesis in the morning or prior to your session beginning and knowing what to look for, so that way when you go into the session, you're capable of being patient and knowing exactly what you're doing and exactly what you're waiting for. So before we do any of those things, I'm going to toss this little thing up there. Oh boy. And let you all know and remind you that I am not a financial advisor. This is not financial advice. It is for education and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please pause this, read this. That way you know anything I say, do, write, type, anything like that. This is not advice. Good stuff. All right, so... how many of you, show of hands, have heard that this trading is simple? Trading is simple, the system is simple, the style is simple, and then you sit back, you scratch your head, and you're probably like, it doesn't have to be now. You might start to understand now, but maybe before you heard that, and you're like, holy cow, this is so far from simple, I don't understand. I know from personal experience, I used to hear this is simple, it's simple, it's simple so many times that I wanted to I was pulling my hair out. It was ridiculous. All right. And I'm here to tell you that it really is. Okay. It's not easy. Like you just said, Cayman, good stuff, but, it's not easy by any means. Trading is not easy, but usually the battle is with yourself and not with the simplicity of trading. In reality, trading is really simple. You buy down low, you sell up high, you sell up high, you buy it back down low. And that's all there is to it. And once you start adding more and more things to it, that's where it becomes more complicated and difficult. So let's break it down into its most basic form. The market only does 3 things. What the heck does that mean? Why does that make trading simple? And how in the world is that ever going to help me put this into, some kind of practical application scenario that you can actually use? We are looking at objective information every single day, whether you know it or not. We're looking at the highs and the lows of the current day. That is an objective number. We're looking at the previous day's high and low. That is an objective number. Where did the market close yesterday? That is objective. The previous week's high and low, those are also objective things. So those are things that we can, I'm not going to say control, but we can see them in hindsight and use that information going forward. That is a leading indicator into what to look for compared to using things like RSI or MACD or anything like that, which is a lagging indicator. Price and how things have put those levels in place are leading indicators. All right, let's get back to simplicity because I'm already starting to go off on a tangent. I'm trying not to do that. We have a high and a low. All right, the market is only ever going to do three things. Whenever the market, closes in breakout. So they've closed the day. The day is ended, and they have closed outside of a previous day's range. They have just fed us an enormous amount of information about what's going to happen the next day or what could happen the next day. Oh my goodness. They're really trying to play with me. Something's moving aggressively because it's shifting my screen. Oh my gosh. All right, here we go. Maybe I should have done this in Paint. It is what it is. All right, so whenever they close and breakout, they have just fed us an enormous amount of information because on the next day, now I only have a few different things to look for. I need to be considering, let's just, I'm going to take this back. Let's not even think about where we're at within the week's range. I don't care about the high and low of the week. Let's not even think about that. Let's just focus on they have broken out to the upside. All right. We have closed outside of the previous day's range, and then the new day opens. Well, what are my options for the next day? What are the only things? All of you should be typing right now vigorously and slapping your keyboard. This right here, I only have two things that can happen, and this is where I use internal structure to try and frame the new day. I look at price action in the new day to determine what I am going to look for based off of my two scenarios. Number one, I project this level across because the market only does three things. It doesn't curve like that, I'll tell you this. But breaks out, it pulls back, and then it trends. It breaks out, it pulls back, and then it trends. It breaks out, and it fails, and it goes usually or typically back to maybe 50% of the range or the other side of the range. So breakout, pullback, trend, breakout, fail, and reverse. I've only got two options the next day. So when you're in a breakout market, and people have been messaging me recently, more than normal for whatever reason, about using multi-time frame analysis and trading off of the higher time frames. I had somebody yesterday message me about this, so I want to make sure that this is very clear. Higher time frames are driving these markets. All time frames are involved in these moves, but I am not looking at daily, weekly, monthly charts in order to take these trades. I'm looking at a 15-minute and a 1-hour chart, and I'm using the previous day's high and low. The previous day's high and low is the monthly chart, or the daily chart, excuse me. The previous week's high and low is the weekly chart. I don't need to go to a weekly chart to make these decisions because of what I just showed you right here. The market breaks out, it pulls back and it trends. The market breaks out, fails, and reverses. It could stay inside of a trading range. I'm not going to worry about that right now. This is my primary focus. Okay, so this right here, tons of information, a massive leading indicator. This video, hopefully this live stream gets like 5 million views and likes because this is as simple as you're ever going to find this explanation. The market also breaks out, and then, so there's a different way that this could close, right? We could have not closed in breakout. It could have closed as a failed breakout. So the market on this day attempted to go, I know I give a lot of shorting examples, but forgive me for that. I always have to choose one or the other. I just kind of choose the shorting one. This pattern can go either way. If the market breaks out and it fails to go higher, well, now I still have only two options. On the next day, maybe they're going to retest the high and reverse. So maybe on this day, we're going to make lower lows and lower highs and then break down and continue to go down. And this is where I would have to start adding in more context because, you know, maybe the day before this, they had triggered a previous day's low, and now we're talking about a 3-day buildup. All right, now we're talking about weekly templates. I don't want to make this too complicated. I just want to keep it at its most basic form. If a market breaks out of a previous day's high or a previous day's low and fails, remember what I was saying in, I think, 2 or 3 videos ago, we were talking about how the market moves. If they go to a high and it fails, typically the next place the market is going to go is back to the low to retest. So when you're trying to build your thesis and it's like, okay, well, they've gone to the high, that's failed. Maybe this was a down moving market as well. So maybe, again, we're going to add some context in here and it's going to be confusing or make it more confusing because I'm adding extra analysis in. But in reality, it's not that much. Market go down. You know, we've been breaking out to the downside. We've been going lower. And then the market triggered the previous day's high. Well, the next place that they're probably going to go is back to the low. So when I'm trying to build my thesis, let's say that they've gone to the high has failed, and then the next day maybe the low has failed. And it's like, okay, well, now what do I do? Okay, well, they've gone back to the low. They couldn't go any lower, so the next day it could of course roll over and just keep going lower, but maybe this was the higher high. This is the higher high. They attempted to go lower. It couldn't do that. So now we need to go back and see if we can start making higher highs again. This is where the templates come from. All right, this with less words, with less explanation, without all of the extra details in there, this is where the templates come from. All right. I really hope this has helped a little bit. If you have not watched, I think 2 or 3 videos ago, where we were talking about the pump for a dump videos and the save 100 out, and it was really the save 100 hours with this. Go and watch that and look at those slides about how the market moves when it retests a higher, when it goes back to a low, and things like that. You'll save yourself an insane amount of time, and you'll probably see things a lot more clearly. And also, you'll be able to look for the different variations of short squeezes and long squeezes and things like that. All right. Just spilled water on myself. Holy cow. All right, that was my value added for the stream. Hopefully that has been beneficial to you all and useful. I'm going to wait a little bit until we do the giveaway. I've got it already pulled up here. Let's take a look and do some analysis, and then maybe we'll do the giveaway here in a minute. All right, news for the day. Let's take a look at that before I get going. It's Friday. All right, we got some news down here at 10 a.m. Okay, so my thought process with 10 a.m. news is things might move more in the first hour, trap in the second, and then maybe move in the third. We could make the moves at 9:30, and then we go into consolidation, and then 10 o'clock the news, and just, maybe it's an afternoon session trade. But my big thing is when 9:30 opens, I'm going to see how things behave. Then I'm going to let 10 o'clock happen and see how things behave. And after the news, if the news is a confirmation of a pre-existing setup that I've already been, tracking or identified, and the market is set up for that, and then 10 o'clock is the confirmation, I'll look for that opportunity if it presents in the session. Okay. So let's go, and we're going to start with the Nasdaq real quick, and we're going to look for the templates. All right, Nasdaq, down moving market. We've got lots of days of breakouts in the market. Then we've gone back and we've triggered the previous day's high on Wednesday. This could have been a higher high. And what's funny is I just did that whole explanation without looking at the Nasdaq. And then here we go. This is the exact situation that I just talked about in my little drawings. We've triggered the high. Okay, we've gone back to the low, and the low may have failed. So now I can easily develop a thesis based off of a template. We have a failed breakout, peak formation high, peak formation low at the low of the week. Now we're coming into today. What should I be looking for? What template is this? We've came in sideways, peak formations, sideways consolidation, spiked the high, spiked the low, pulled back up on the inside. So I have some options. Number one, we have a trend trade opportunity in a down moving market on a Friday. We've pumped it back up, possibly 3 levels. So we could look at a 100 pip box. We've got 100 pip box down low, possibly failing. So we got 3 levels coming back up, possibly. So maybe double zeros is my number to be watching. Okay, this might be our 3 levels of rise for the trend trade in a down moving market. Holy cow, 40? Yeah, we're going to put that down a little bit. I don't know why that's like that. All right. Three levels of rise in a down moving market. Basically looking for strike zones, a pullback area. Market only does 3 things. I'm going to project this level across. I'm going to make it black because whatever I've got going on here is a little too much red for me. There we go. Okay, so I've got my breakout level, peak formation high, peak formation low, consolidation in the middle. I've listed out my level 3 rise for the trend trade if it presents in the session. What is the other thing that I may be looking at or looking for? Well, we've got peak formation high, peak formation low. This could have been, let's see, was this? We had day 1, day 2, day 3 of the cycle. Day 3 was a breakout down. Let's revert back day 1. So we're back to day 2. But this could be where the dump has began. Okay. All right, I'm listing out scenarios in my own head. I've got a long scenario. We've got a higher high. This is the high of the week. We've came down. We couldn't go any lower. We made a higher high. We've came down. We couldn't go any lower. And then now, are we going to explode? Peak formation high, peak formation low. Consolidation in the middle. Yep, that looks better right there. Day 2, first red day, maybe. A breakout day, nonetheless. All right, peak formation high, peak formation low, consolidation in the middle. Is the breakout going to fail? Is the breakout going to succeed? I've only got 2 options. That's the simplicity right there. I've only got 2 options. We have a higher high. Is it going to go back up? We have a lower, or we're in a down moving market. Are we going to get a trend trade? Is the breakout going to succeed or is it going to fail? All right, this is where it closed yesterday. Okay, I watch price action on the day. I watch the time of day. I don't like this. The way this is swinging so wide is kind of weird. I don't like that too much. All right, I watch price action on the day and I watch structure on the day to help me make a decision. Do we make a lower low and then make a lower high? Do we make a lower low, then make a higher high, and then does that higher high fail? Things like that. I've got this trend channel drawn up here. I think I'm going to adjust this a little. This is not usually what I'd like to see with one of these channels. Although it is showing signs of acceleration. Let's see if I can adjust this a little bit. Be a little bit more accurate. I don't like that either. I don't even know if it doesn't, now that I'm down here on a lower time frame, it doesn't really seem like it's pulling the way that a parabolic channel should. We'll see though. All right, Nasdaq. So let's go to US 30. For the one that said day 2 break or first red day, I think that was more of a probably just breakout day 1. All right, or just a close and breakout, right? We've broken the high, resetting the breakouts, and then we've broken back down to the downside. I would just count that as probably breakout day 1. But it doesn't matter. Now we're just arguing what to call something, which is ridiculous. The market closed in breakout. Is that breakout going to succeed or fail? All right, that's we'll keep it as simple as possible. All right, US 30. Wow. Front side of a move. And we've just been going lower and lower and lower and lower and lower. Cool. All right, 3 days of shorts in the market minimum. Okay, with 3 days of shorts in the market, I have a very specific thing that I like to search for, which is front side of a move being broken could be number 1. Also, a market to make higher highs and higher lows and basically turn into a short squeeze. We've got peak formation low, maybe a failed breakout, maybe not. We don't know yet. So I'm going to project this level across to help me determine. And then you can kind of see where the squeeze maybe it might be forming. I don't know. We're making higher highs and higher lows on the day. Okay, looks like we came up here. We pulled back. We've came up. We've made a higher high. Adjust some of these levels up like this. All right, so we're making higher highs and higher lows on the day. I've got my levels in place. All right, so thesis-wise, number 1, we're in a down moving market. Is the breakout going to succeed? That would be a trend trade, right? So maybe 3 levels of rise. Let's take a look at that. All right, we got peak formations down in this 100 pip box, and we've came back up 100, 200, maybe 300 pips. Okay, so 300 pips back up in a down moving market. But all I'm doing right now is just gauging a pullback, basically looking at where it could fail. Trying to figure out where the strike zone might be. If it just keeps going higher, well, then we might be going higher. I don't know. We'll see. Ticks, pips. Yeah, ticks is the futures version of pips. Calculated pretty similar. All right, I think this is everything that I can do. Hey, if you're confused about that, Clifford, the best thing you can probably do is just Google it. And so like right now I'm looking at an indice, right? The US 30. If I were to go to it, that's why I do my analysis on these charts, is because the 100 pip box, this is where they work the best. If I were to go to a futures chart, it would look very different. The ticks are a little bit different than the pips. And the pricing wise. All right, S&P, I think this is going to be pretty much the exact same thing. Let's see here. Yep. So same thing as the Nasdaq, same exact analysis. We closed in breakout to the downside. We've been going down. They traded the previous day's high on Wednesday. We've traded back into the low. Is same exact thought process, same exact analysis, all that stuff. Is it going to break out and succeed, or is it going to break out and fail? Right now, we've pulled back up, and we're making higher highs and higher lows on the day. I will say that this looks a lot more parabolic, but it's also only 8:30 in the morning, and it's already going vertical. So we'll see. We'll see. It's pretty early in the morning to make big decisions just yet, especially on indexes. Okay, the Russell, exact same template as everything else. All the other indexes that I've looked at so far, I'm not going to waste you all's time. It's the exact same. We spiked through the high, which closed in breakout. Now I am going to take a look at this one, and I'm going to highlight myself real quick because unfortunately yesterday I got stopped out at break even on 2 pairs. This one I got stopped out, I think 2 ticks in profit or something, but gold I ended up getting stopped out break even. No, maybe it was the other way around. Either way, when I get to gold, I'll show you all that one as well. Market, we've triggered the previous day's low. So you know that one of the things to look for is when they trigger the previous day's low in a down moving market, could be a lower low, and then I'm looking for the pump up. We got the pump up. This was 6 o'clock in the morning. Look at how they traded back up into the high. push 1, pause, push 2, pause, push 3, engulfment. This was not an engulfment, but this bar was. So I started getting in, and then I added into my position, and then we started to follow through, but I had take profits down a bit lower. I thought this was going to be an expansion of the day, and it was. And I really wasn't willing to close my position because I wanted a much higher risk to reward, and I was going to let this one play out and go. And this is one of the things that happens. Sometimes you just have to manage, and from time to time I get stopped out like this, and it's disappointing, but I know that it's no big deal because, there's always going to be new opportunities tomorrow and things like that. So in reality, in my afternoon look back, if you will, my grading, I think I did a fantastic job with my entry. I did a fantastic job with my management. I did everything right. I went to break even at the right times. The only thing that I'd have to criticize myself on is maybe walking away from the session a little too early, because this was a higher high and this was a lower low. I was the first mouse, unfortunately. I was the first mouse. They pop back up, 1, 2, 3. We get our engulfment, our sideways consolidation, and our continuation. This was a perfect opportunity at 10:30 to get in. Again, right here. So part of my my little poll for today, right? It looks like we've got 41% of you are only willing to take 2 losses in a day, with 9% of you taking more than 3. All right, I'm more of the two losses in a day kind of person. I don't like to just keep on taking a loss. Now, these were break-even losses, but I still consider them losses, okay? Regardless, we get a little pop-up, 1, 2, 3. This is the perfect entry. Breakdown, sideways consolidation, 1 tick below that bar. This is an inside bar. 1 tick below this bar. Let the market pull you in. And then from that point, this is, again, one of the ways that you can take profits, measuring those consolidations, measuring the high and the low of the day, and looking for expansion targets. So that was my one little time. I'm gonna highlight myself on this pair, and I'll show you on gold what I did wrong as well, because it's gonna happen to you. So I might as well let you all learn from me, right? Let's go on to oil. All right, good deal. Okay, Tuesday, peak formation at the low of the week. I think this was probably a first green day, if I'm not mistaken. Yeah. So we had a peak formation at the low of the week on Tuesday, first green day. And then I think we talked about this when we came in on Wednesday. And then we get breakout day 1 to the upside on Wednesday. So now, did this close? Yeah, this was an opening range breakout to the upside. They triggered previous day's high and pulled back. Basically, it wasn't an inside day, but this is a fairly wide range day. Let's see here. We've been going down, right? Yeah, oh yeah. All right, so template-wise, we got a peak formation at the low of the week. They pumped it back to the high of the week. Is this breakout going to succeed, or is it going to fail from Wednesday? Okay, we broke out. We made a higher high. So maybe over the course of 3 days, right? We get a breakout, higher high pullback. What is today going to do? Is this breakout going to succeed, or is it going to fail? Keep it as simple as possible. We're making higher highs and higher lows on the day, right up until let's see, we started breaking down, I think, a little bit over here. We get 2-bar pullback. That bar's outside of that bar's range. And we're getting a little bit of a creeper down. Okay, so making lower lows and lower highs right now. So, template-based thesis. We're in breakout to the upside where we broke out on Wednesday to the upside and made a higher high. I project this level across, breakout pullback. You know, are we going to continue to go back up towards the high of the week, breakout pullback trend, back up to previous day's high? That is one setup that I would look for. That would be a playbook opportunity. Should really be looking at Nasdaq. Oh boy, what has happened? Nice. Yep. 8:30. We'll see at 9:30, 10. That's what I was saying earlier in the stream about movements maybe happening early because of the news, and then, yeah, is what it is. All right, oil. I would wait personally to wait for a higher high at least before I look to enter into this. And depending on timing and things like that, you know, we'll see. Not exactly I don't think this is probably my favorite, though, for the day. We got natural gas. We're just going to keep going. Let's go to gold. All right, gold. Yesterday, I actually posted this in the trades in process on Discord. And I had said the market only does three things. And this was it was meant to be an expansion trade. We're making higher highs and higher lows. 940, 935, 930, all right? 930 happened. We get the breakout bar. I bought the break of that bar. Okay, so we get the 2 bars higher, making higher highs. They broke the high, and then immediately we got an engulfment back down to the downside. And my entry was right here, so it was pretty close. When that bar closed, I closed my position, which is pretty unfortunate. Seeing now, you know, coming back and seeing that they continued to rally. I'm not mad at it because that was a pretty... My entry was very close, and that bar was pretty strong to the downside, so I managed risk, and I was 2 bars up. You know, let's see how much this is. Yeah, I mean, that's pretty decent, right? It's 2 bars up on a 5-minute chart on that entry, and then I would say that I probably, on the break of the high, maybe should have taken a little bit off, but again, similar to the Russell, I was looking for more of an expansion trade, more, it wasn't supposed to be a scalp, so is what it is. I managed risk. I can't predict the future. All I saw was that big bar coming back down, putting them pretty much right at my entry, and then seeing this 1, 2, 3 at 9:30 and an engulfment at the high of the day. Made me think twice about that, so I ended up closing that, and I'm not even mad about it. Okay, again, what should I have done though in this situation? I absolutely should have just kept watching this, and at the break back up, like how it's come down like this, immediately went back into consolidation and broke back above, putting in a peak formation low continuation pattern, and then even giving us a nice little parabolic channel. This is extremely clean. I should have just kept watching. So that's what I journaled yesterday was, you know, don't be so quick to get off the screen. Just observe and watch and keep a level head. Watch things objectively and take the trade, you know. Execute lifetime performance. All right, so let's go and take a look now at what has happened. We got 3 days breakouts in a direction. The 1 minute was even cleaner. I don't know. That's insane to me because the 5 minute is that clean, and then you're saying the 1 minute's even more clean than that. Yeah. Can you please look at US Swiss? Absolutely. Gold, 3 days of breakouts. We closed in breakout yesterday. Same exact analysis. Is the breakout going to succeed? Is it going to fail? And where are we at a certain time of day? So we're in breakout right now. To the upside, I've got my high of day in place. This is the high of the day prior to the session beginning. Okay, really no... Boy, they have done some craziness before the sessions even began. And they have put us right in the middle of a consolidation. Okay. Yeah, I'm going to have to wait aggressively for for a later time for on this one. Breakout pullback. I'm going to wait for them to go back to the high to go back to the low. Joseph, hello. There is a lot of room down there. Absolutely. Just a reminder, again, we're making higher highs and higher lows, breakout pullback. But Glitch, like you just said, this is 3 days of breakouts. We're at the high of the current week. And if we were to start making lower lows and lower highs, we've got a pretty big box up here. And there's nothing holding it up. There's nothing holding it up. It would just, there's a lot of free fall to come on back down. Am I saying that's going to happen? No. The market is still making higher highs and higher lows. But the market only does 3 things, and we're in breakout right now to the upside, so I would be possibly looking for it to fail. 3 days of breakouts. All right. Silver, does silver look any better? Okay, so silver's a little bit of a different picture, but it's the same idea. All right, same thesis. 3 days of breakouts, 1, 2, 3. We're back at the high of the day now. We're back at the high of the week. Let's see, we were making higher highs and higher lows. They made a higher high. Spiked down on the day, made a lower low. Okay, so this is going to be very important to me. We've made a lower low, and we've gone back to the high. Does the high fail? Maybe we get a 3 push pattern up here, and then it breaks down and goes vertical, trapping everybody up here at the high. If this high fails, I'd be happy. Has gold done something similar, and I just missed it? I mean, I guess technically, am I going to count these as swings in a lower low? Probably not. I think that might be a little aggressive. But on silver, that would absolutely be, something that I would normally do. We got a lower low. They go back to the high. We've broken out of the high. Is the breakout going to succeed or fail? We get a 3 push pattern up here, and then it breaks down and fails. That's a trade that I'd be willing to take. Okay, if it were to occur. We've got 3 days of breakouts. Again, look at this. There's nothing holding this up if it were to go into free fall. Okay, so we'll see. I definitely think I like silver more than gold, though, just because of the details, and details matter. All right, Bitcoin. I don't trade Bitcoin. A lot of you do. So I've been adding it to the list for you. Okay, so this is peak formation high, same as the indexes. All right, peak formation high, peak formation low. This one's channeling pretty, even on an hourly chart. I'm looking at the hours, 15. Look at this. Peak formation low, peak formation high, consolidation in the middle, parabolic channel pulling. Be watching the traps, making sure that they're not letting out the shorts. I don't want to see them let out the shorts. Any of these aggressive down close candles, I don't want to see them let these guys out. Price action is showing to me right now that this is a strong pull to the upside. If they start letting these people out, it's not a strong pull to the upside anymore. All right, so that's the kind of price action behavior that I'd be waiting for, watching. In these parabolic channels, I like to see a first mouse. I like to see them come out, get everybody going long, give them a little bit of the middle finger, if you will. They come back down and hit the low of the channel, get everybody to go short. Haha, we got you again. They spike, they rip it back up into the range, and then on the engulfment continuation, that's usually where I'm trying to get in on this pattern. That's where I found that I believe it's the most safe, or where my thesis is the best confirmed when that happens. So in combination with those things, not letting out the shorts, and then that behavior that I just displayed, that's kind of what I would probably be looking for. All right, and then as far as targets go, explosive move back up through the peak formation high, which would be up yonder. Okay, maybe even an expansion of that range if it presented that way. If it blew out of here, wow, that's a lot. Okay, 25.50 outside the range is average. Peso has been kind this week. Okay. Let's go take a look at some other things. I saw somebody say earlier the Swiss. Let's see if this one makes me jump out of my chair. All right, we're turtle peaking. Popped up, popped up, popped up. We keep on going higher, making higher highs and higher lows. Again, same thesis. We've been going down. We've started going up. We got 3 days of longs in the market. Over here. Is it going to make higher highs and higher lows? If I'm looking for a buy low opportunity, normally I'm going to either get in at the low of the day or low of the session. Or maybe at closing price, something like that. That's not where we are. We're back up here at the high. So on this pair, to make this a more, what would I call it? A more playbook opportunity. Sorry, I'm having a brain fart. Need more caffeine. More playbook opportunity would be 3 days of longs in the market, and then they triggered the previous day's high. If they start breaking down, making lower lows and lower highs, that would be the playbook opportunity going back towards where that pump began, which was maybe the low of the day. If it presents, okay, it has to present a certain way. I'm just giving scenarios. EuroCAD. All right, 91 people in the stream right now. Ladies and gentlemen, if you all could smack that like button real quick. And, let's see here. Yeah. And we're going to do the giveaway here in 2 seconds. 8:42, we got 15 minutes. We got plenty of time. All right, EuroCAD. We're in breakout to the upside. All right, so you have to, for example, this is a fantastic trade. This is phenomenal. This is beautiful. You're not going to probably see much. Okay, it's outside of the trading window, so maybe not. However, this is a lot of movement. Beautiful trade. Are we in breakout to the upside? No, we had a first green day yesterday. Oh, man. Did anybody take the EuroCAD trade in the London session? Okay, lower low, spike, higher high. Comes back down, push 1, push 2, push 3, peak formation low, higher high on the day. Pullback, consolidation. Continuation back up through the high. This is picture worthy. This is study binder worthy. This is even in breakout to the upside. So we had an opening range breakout on Tuesday. So now we're maybe transitioning to an up moving market. And then you get a first green day, Wednesday, Thursday, first. This is beautiful. Holy cow. I'm going to have to fanboy over this a little bit more. That's a good chart. Now, where does that lead us into for, the rest of the session? I don't know. This was the trade down here. This was optimal entry. This was perfect. Now we're just back up here and in consolidation. So, yeah. If you don't mind. No having any opportunity for multiple days frustration, generally no more than, well, I would say 4K it depends on your playbook, all right? So like with how mine is set up, you can find a setup every single day. Now, if you don't have setups that show up every single day and you don't know what to look for every single day, that means that I would be telling you this and you would just go and start trading every single day and you're not trading setups anymore. So don't take that the wrong way. Okay, please don't take that the wrong way and start doing that. If you have setups that show up, let's say that the trades that you take are 3 or 5 star, but they only show up less frequently, then there's nothing wrong with that. Okay, don't get frustrated because of that. The only time I ever get frustrated is when I don't follow my own plan. If I go into a trade confident and I know what I'm looking for, which I always do when I go to enter a trade, I know what I'm looking for, and then I don't follow my plan. That's the only time I ever get annoyed with myself. How do you manage it? Stop trading for that day. If you get frustrated or you get angry at all, you're no longer in a business, professional, cool, calm, collected mindset, and you just, in my opinion, that's when it's time to be done. Because you're no longer thinking from a business perspective, you're thinking from an emotional perspective. You're not going to make good business decisions when you're angry or frustrated. You've had a great week. I love to hear that. That makes me want to jump out of my chair, RD. Good stuff. I had someone yesterday say just about the same, that they haven't been able to. I keep getting a lot of people. They keep saying, I've never been able to see this stuff, but ever since I started watching your channel, I get it. And it's like, and they've started being profitable, or they've started doing whatever. And it's like, holy cow. That motivation to keep going, if you will. All right, let's see here. Heck yeah, Clifford. Good stuff. All right, we're going to do the giveaway. 90 people in the stream right now. I think we're maxed out for how many people we're going to get in here to make this announcement. So, you got one last chance. This is the video that won. Holy cow, where did it go? You got one last chance to run over there and put a comment in the comment section before we do this announcement. All right, this is the one that won on the poll. So this is the comment section that I'm going to be pulling from. Okay, I'm going to use a random, what do you call it? A random comment selector or whatever, and then we'll get out of here and get into the trading session. Whoever wins, message me either on my website or on Discord, and we'll get you set up. Okay. Whoever wins, message me on Discord or on my website, and we'll get you set up. Okay, here we go. I've already got the URL in there. I'm not a robot. It's my first time using this, so hopefully I don't do something weird. Here we go. Juan Jose, you in here? Juan Jose, you in here? Oh boy. All right, we're going to do one more since he's not in here right now. If he's let's try again. Edgy, are you in here? Oh, man. All right, we're going to go one more time. If not, I'll use these three people and we'll try and get a hold of them somehow. MS Goody. MS Goody. There we go. Heck yeah. That's what I like to see. All right. Miss Goody, if you want to, if you have Discord or my website, either one, you can message me on either, and we'll get you set up. Heck yeah. You have my Discord. All right, good stuff. Message me on there, and you won. Congratulations. All right, ladies and gentlemen, I hope this has been a good stream to you, and you've got some value out of it. Time to get into the trading session. I'm going to be watching for 9:30. I'm going to wait and see, what the side picture looks like at 9:30, and then around 10 o'clock when that news happens, if things present, good stuff. If not, coming back next week and searching for setups as always. Ladies and gentlemen, you have a great rest of your day and a great weekend. I'll see you in the next one. Bye-bye.